Namaskar and welcome to Sansad Television. I am Vishal Dahiya and you're watching our show Perspective, where we bring you detailed analysis of key national and international issues as well. Today we're going to talk about the Economic Survey 2021-22. Finance Minister Nirmala Sitharaman tabled the Economic Survey 2021-22 in Parliament on the first day of the budget session on Monday. The survey says that overall macroeconomic stability indicators suggest that the Indian economy is well placed to take on the challenges of 2022-23. According to the economic survey, India will witness GDP growth of 8 to 8.5% in the next financial year, that is 2022-23, supported by various factors such as widespread vaccine coverage, gains from supply-side reforms, easing of regulations, robust export growth, and availability of fiscal space to ramp up capital spending. Now, for the current fiscal, the economic survey estimates 9.2% GDP growth in real terms. This includes a sharp rebound in services and industrial sector, which were hit very hard by COVID-19 pandemic. Investment is also expected to see strong growth of 15% in this fiscal year. Agriculture sector is expected to witness a growth of 3.9% as compared to 3.6% last year. Now, the economic survey also says that emphasis on supply-side reforms rather than a total reliance on demand management has been a distinguished feature of India's economic response during this pandemic. We will discuss and analyze all aspects of economic survey with a panel of distinguished experts. But before we begin, let me introduce them to you. Beginning with, we have with us Mr. Rajiv Mantri, founder and MD of Navam Capital. We also have with us Dr. S.P. Sharma, Chief Economist with the PhD Chamber of Commerce and Industry. Ms. Rajni Sinha is also joining us, Chief Economist and National Director at Knight Frank, and Senior Journalist and Editorial Director of Business Standard, Mr. A.K. Bhattacharya, is also joining us. Welcome, all of you, to Sansad Television. Let me begin with you, Mr. Bhattacharya, before I go to the industry experts and Chief Economists out there. Let's start by summarizing what the economic survey says. In your views and in your words, what is it that the economic survey is pointing towards clearly? I pointed out certain aspects in terms of what it says for the next fiscal year and for this fiscal year as well, vis-a-vis growth and sectoral growth as well. But what's the summary?
Well, you did a very competent summary, Mr. Dahiya. But let me try to improve upon that. I think this economic survey is preparing the ground for some sort of budgetary push towards more expenditure, because the survey has clearly laid down the path and the instruments that would be used to address the COVID-induced problems in the economy. Not through demand-side measures, but through supply-side measures. And the manner in which it has laid out its arguments, it seems to me that the budget would probably will provide more expenditure push rather than any taxation or other demand-side measures that we will see tomorrow. That is point number one. Point number two, I think its growth projections are critically dependent on 4 or 5 key parameters or conditions, if I may say. And one of them is crude oil prices remaining an average level of around $75 a barrel, which seems to could be a spoiler. So the conditions of 8 and 8.5% growth, depending on the crude oil price, which is a critical factor, and an orderly withdrawal of the central banks across the globe from liquidity infusion, will probably be a bit of a question mark on whether we need to be conscious of that. And finally, what I would say is that this is a survey that establishes the importance, in my view, of a single volume survey, that instead of getting into highfalutin ideas, it actually sticks to the knitting. And I welcome the return of the economic survey after what I would call an aberration of 7 years of getting into a volume 1 and volume 2, I think this survey is far more centrally focused to the state of the economy and the various sectors, how it has panned out, how they have panned out.
Okay.
So I welcome the survey structure because it tells you more about the state of the Indian economy rather than the kind of advice and the theories that were put out in the last previous 7 surveys.
Okay.
So I think I will stop there.
Okay.
Thank
Okay,
you.
Mr. Bhattacharya. So basically what you're pointing out is that once again, it comes out as a simple and direct document, something which you're referring to, talking about facts and figures, pointing out what has happened so far and what is likely to happen in the next fiscal as well. Let me bring in, Ms. Sinha here. Ms. Sinha, from a macroeconomic perspective, if we take a cursory look at the figures, it looks like we're doing fine. It looks like we've bounced back in a very robust manner. And the road ahead also, as per the economic survey, is very positive, very optimistic.
Yes. So actually, the survey has given in details how the different macroeconomic parameters have performed so far. And like you said, it's looking pretty good right now. But here I would like to highlight one aspect. The survey talks about 8.5% growth, which is actually quite looks reasonable. It's less than what IMF has projected for India for FY23. But here, like Mr. Bhattacharya pointed out earlier, the critical aspect is that these are very uncertain times, and this projection is based on a lot of assumptions. Firstly, there's no further severe economic disruptions going forward. Proper withdrawal of monetary stimulus by US Fed, no major reaction by financial markets to that. Supply bottlenecks are cleared properly. So it's, and like you said, the crude oil at $75. So all these things are pretty uncertain. It's difficult to say how it will pan out going forward. But if we go by these assumptions, then 8.5% looks pretty good. And another thing I would like to highlight is that survey has also given in detail as to how many of the other macro parameters, be it in terms of FDI, the current account deficit, how these parameters, how India is better placed than when it was in the previous crisis situation, like the global financial crisis or when we had the taper tantrum. In those periods, many of these parameters currently are much better placed, including forex reserves. So India is better prepared to handle any untoward incident going forward.
Okay. You spoke about the FDI and the investment part. I'd like to bring in Mr. Rajiv Mantri here. Mr. Mantri, when you look at the figures in the economic survey on the investment aspect, also there seems to be a lot of positive momentum there, 15%, and that seems to be during the pandemic period. That speaks volumes about the fundamentals.
No, so I'll point to two graphics in the survey. The first one is there is a kind of geographic counting of the startups in India. And the survey has mapped where the startups are, where they are growing, and so on. And you can see what a difference it is in a period of just 5 years. We are seeing now entrepreneurial activity mushroom across the country. And in addition to that, we all know how last year was a record year for capital raises in the public markets. So both these aspects combined, where private companies at the early stages and the growth stages are able to raise capital, and they are creating new businesses, deploying new technologies, meeting the needs of consumers and enterprises in new ways, injecting a really innovative spirit, which was frankly not there in India. I've been in this business, in the venture capital business, in the investment business now for over a decade. We've not seen anything like this before. This is truly something new that is unfolding before us. And then the IPOs which happened last year, which helped many companies raise capital. Now those companies are making investment plans. They are expanding, let's say, their logistics networks, their own capabilities in different sectors. So all of this bodes very well for growth, I feel, because it is particularly emphasized on new age industries and new sectors.
Okay, okay. That again, indeed, is a very significant aspect of the growth story there. Let's look at the two other sectors also. And, Dr. XP Sharma, I'd like to bring you in here. And those are really important because when we look at the figures, they tell us the whole story much more in detail and what's behind the story as well. That is industry and services sector. From a contraction of around 7% for the industry and around 8% for services, we're looking at an expansion of around 11% for industry and almost around 8% for services sector. That seems to be the turnaround.
Yes, Mr. Dahiya, that is looking lucrative for the current year because last economic survey, the economic survey of 2021 was a survey of the downturns, and we saw severe downturns in each and every macroeconomic indicator. So now this survey is a survey of recovery. So that is indicating a consolidating year for the 22-23, and the budget and the economy will consolidate in the next year because this is the survey of the base effects. And if you observe the averages are not that much lucrative, but going forward, as the growth is projected at somewhere between 8 to 8.5%, that is really lucrative on the base of 9% for the current year. So looking forward, we have a lot of challenges also and a lot of opportunities on the back of various reforms undertaken by the government during the last 21 months. Mm-hmm. As you rightly said that industry will grow at the rate of 12% or 11.8% for the current year. But the consumption, I am looking at the consumption pattern. So the consumption pattern should also match with the industrial growth and the growth of the services. So moving forward, I believe there must be more and more focus on the rural development and the expenditure scenario of the rural India. Okay. And expansion in the capital investments by the government to move forward with more and more employment creation in the economy. So I believe the budget must focus on the small businesses. I believe there are more than 6 crore micro units in the country, and they have to be supported and rejuvenated from the daunting impact of the pandemic coronavirus. Okay. So moving ahead, the overall economic survey is very, very pragmatic. And going forward, I believe India is now looking promising in the global charts. We are the fastest moving economy in the global economic system once again. And for the next year also, we will be in the faster lane that is projected by the economic survey at 8 to 8.5%. If that becomes at 8.2 or 8.3, then still we will be the fastest moving economy in the next year also. Indeed. So we have to capitalize this growth trajectory with more and more promising reforms at the ground level. Firstly, the ease of doing business for the small businesses, so that they are also able to participate more in the growth trajectory of the Indian economy, because they were impacted by the slower demand and the piled up of the inventories. So moving ahead, the working capital and the financial problems of the small businesses should be looked at in the coming year. That will be the year of consolidation, and that will provide a shape of the Indian economy to become the 5 trillion in the next 4 or 5 years. With the support of the MSMEs, with the support of the startups, which are becoming very, very lucrative for the Indian economy. And we saw that in 2021, 2022.
Indeed. So small businesses, MSMEs and the rural sector, that's what you're pointing to in terms of the focus for the budget and the next fiscal as well, Dr. Sharma. Hold your thoughts there. I'll come back to you on that aspect. But a related, sector here, Mr. Bhattacharya, and that seems to have been the bedrock of Indian growth story, Indian economy as well. We've seen it during the COVID pandemic times also. That is agriculture and allied sector. Now, as per the economic survey, it was 3.6% and it's expected to be around 3.9%. That's a bit of an improvement, but scope for more there?
Well, certainly, I think agriculture has shown considerable resilience in the COVID time. As a matter of fact, if agriculture had not performed well, the overall recovery that the survey claims about Indian growth, Indian economy wouldn't have been possible. So therefore, there's no doubt that agriculture has been a performing sector. But I think what the survey probably plays down in my assessment is the consumption and the investment dynamics of the economy. I mean, it's true that that the consumption may have gone up by 7% on a year-on-year basis, But the fact of the matter is this, that the private consumption is still lower than what it was 2 years ago. There is investment recovery, no doubt. But I think this is led by the government right now. So therefore, one has to depend a lot more on the budget to see what the government spends.
Okay.
And hopefully, government spending more will be a crowding in factor for the private sector investment. And my final point here would be that while consumption demand needs to be revived through various measures and schemes, and investment recovery has to be ensured by crowding in more private sector investment, which the survey claims that it is in the making. But one has to see it actually happening in the real sector of the economy, as Dr. Sharma was talking about, whether the MSMEs are coming back or the big private sector are coming back. But the larger point is, to my mind, what is going to be the fiscal deficit for next year, because the survey itself admits to the government's, central government's debt to GDP ratio touching almost 60% of GDP, which will actually increase the government's interest payment burden for the coming years, which will crowd out the government's ability or restrict the government's ability to spend more on various schemes that are needed.
Okay.
So therefore, the fiscal deficit dynamics, while the survey says that there is room for fiscal room for more expenditure, but one has to see that how that the higher expenditure, that greater fiscal room is secured or ensured, so that the government does not get into a situation where increasingly more and more revenues are usurped by interest payment liabilities of the government. And that is something, in my view, the survey would have done well to have focused a little more on what is it, the medium-term trajectory on how to reduce the debt to GDP ratio, which has gone up from around 42% to 60% in 1 year. It needs to be brought down. The survey recognizes it. But there has to be a game plan, how you bring government finances under control. Otherwise, interest rates may go up and it will act as a pressure on government finances. So I would say that the survey points out and highlights all these areas of strengths and weaknesses, but probably we have to see how the budget addresses those concerns.
In fact, we will have to wait for the budget, speech and the budget document to understand those aspects. But that's a very important, significant point, Ms. Sinha, in terms of the fact that it might be a tightrope walk for the government vis-a-vis the money it has or the money it earns and the money it spends to have that debt to GDP ratio in check, in control, in that particular limit also, and the consumption part, which Mr. Bhattacharya was referring to. Ultimately, of course, the supply reforms have been the focus, but ultimately the consumption side will also have to be taken into consideration. Do you agree?
Yes, I fully agree. So if we look at the different parameters, consumption is one of the parameters that's still below the pre-pandemic levels. If we look at the GDP estimate for FY22, so that's definitely something which requires a push. If we look at what the government has done so far, which the economic survey also highlights, it has been more of supply side reforms. But what will really give an immediate push is if there are some demand side measures which are announced in the budget. That will give a push to the consumption, which will also lead to a push to investment happening. Because if we look at the private sector currently, they are in a position to start investing. There has been deleveraging that has happened in the last few years. Private sector is ready to invest, but the capacity utilization level needs to increase to give them that incentive to go ahead and invest. So I think if the government announces measures to push consumption, that will also result in private investment increasing going forward. One more point I would quickly like to highlight is about government finances. While government finance will be a concern going forward, but the positive point to note here is that government revenue collection has increased.
Indeed.
And a lot of it has happened because of this move of the economy towards formalization that has resulted in tax revenue collection increasing. And this move is not a very temporary move. It is going to be here going forward. And hence we can be more optimistic on tax revenue collection going forward.
That's a long-term change which you're referring to, Ms. Sinha, that is something which will ultimately be the balancing factor out there. Mr. Mantri, your views there on the linkage between consumption and private investment, one part, and second, of course, all of us will get to know on Tuesday as to where it has actually been spent by the government. But in terms of the expectations as to where should the government spend now, given the fact that these are the figures and these are the graphs and charts which we know about various sectors vis-a-vis our economic story or growth so far?
So I would just highlight that on the point of both, tax collection as well as the point that Mr. Bhattacharya was raising on government finances. So one of the signature efforts of this government has been formalization of the economy, right? So that's connected with the war on black money, that's connected with the corporate tax cut, and the entire effort to sort of link public services with Aadhaar and so on, cutting leakages so that there's a less cash economy. So all of those efforts, I think, are now bearing some fruit, where we are seeing record digital payments, embracing of digital payments by even the smallest businesses in the country.
Mm-hmm.
The micro businesses also are taking to digital payments. So where that connects with formalization and thus leads to a larger, broader tax base and thus higher tax revenue, which I feel we are in the early stages of that cycle.
Okay.
So we will see increasing formalization, which will raise tax revenues. And also, I think we should highlight here the privatization push that is now underway. So Air India, we all know, has been successfully divested. Just today, Neelachal Ispat also has been divested to Tata Steel.
Mm-hmm.
And there are reports of Ashok Hotel being sold. And I mean, all of them individually, bits and pieces here and there. But the strategy of the government now is to divest these assets, to harvest that cash from these assets and then deploy them in the different programs, whether it's infrastructure creation, whether it is welfare schemes, and so on.
Okay.
So, and then the answer, I believe, to debt ultimately is to grow. So
Indeed.
if the Indian economy keeps growing at 8, 9, hopefully even double-digit growth,
Indeed.
closer to 10% in the next 3-4 years,
Indeed.
I think that debt question will always stay under control because growth is the answer to those potential, fiscal problems which might arise in the future.
Okay. Growth is the answer, and the government will have to strike that balance between its spending as well as its earnings out there. We're running short of time, but quick concluding comments from you, Dr. Sharma, in terms of where the money should be spent. Earlier, you're talking about the focus has to be on rural development, on small businesses, on MSME sector.
Yes, I totally agree with the previous speakers, and I would like to mention that there must be a strong equilibrium between the income levels and the inflation, because now the inflation is very, very high. That is not warranting any expenditure by the individuals. So that has to be looked in. Because if the personal disposable income is increasing, then they will be able to spend more in the market, and that will be a great support for the economy, because now the capacity utilization is not that much lucrative. We are only at 60 or 70% capacity utilization. We have to increase this trajectory with the increased consumption, and the consumption will increase if the income levels are going. So we have to control the inflation. We have to find measures for the control of inflation. There are a lot of commodities which are the basic inputs for the industry, and these are very, very high as compared with the April 2020 levels.
Okay.
Sometimes there is more than 100% increase in the prices of such commodities. So we have to control the inflation so that people are able to spend more and they are able to buy more on that much limited income levels. So my suggestion is that focus must be on the 3 major parameters. Firstly, to boost the consumption expenditure and to control the inflation and to enhance the income levels of the people to move ahead and to become more and more sustainable in the growth trajectory, which is now supported by the various reforms undertaken by the government during the last many quarters.
Okay.
So going forward, the focus on small businesses, as I said earlier, is a key point that will increase the consumption level, that will also increase the income level, because if the small businesses are supported, then more than 6 crore businesses, small micro businesses, they will be able to sustain and to buy more goods and services from the market, because they are always buyers of the medium-sized companies.
Indeed.
So they will be able to spend more, and the economy will be in a strong growth trajectory moving ahead and to support and to become a 5 trillion in the coming times.
Okay.
So,
Those are really important and significant points which you're making, Dr. Sharma, and we'll have to wait and watch as to what the government does in terms of the steps it takes when we hear the finance minister and her budget speech on Tuesday at 11 a.m. Meanwhile, thank you so much, Dr. S.P. Sharma, Mr. A.K. Bhattacharya, Ms. Rajni Sinha as well, and Mr. Rajiv Mantri for sharing your views and insight with our viewers. As our experts were pointing out very clearly, the economic survey says a few things, and the summary of that is that there is a positive sentiment in terms of the economic recovery from the COVID pandemic shock, as well as the move ahead when the survey says that for the next fiscal, the expected growth is around 8 to 8.5%, and for this one, it will be around 9.2%. Meanwhile, we'll keep on bringing you all the details of what's happening on this front, and more importantly, the budget, the union budget, which will be presented at 11 a.m. on 1st of February. Stay tuned to Sansad Television, wherein we bring you in-depth analysis and details of the union budget throughout the day. Thank you.